You're with us here on BTTV. I'm Aabha, Bakaya. Let's take a look at the markets and how they're doing this afternoon. And right now, we're of course continuing to be largely in consolidation zone with a slightly positive bias, as you can see on your screen. 19,700 on the Nifty, Sensex at 66,448 as we speak, fluctuating a bit. Lots of stocks to talk about, particularly as we're in the throes of earnings. Let me welcome Ashu Madan, who's with us this afternoon. Ashu, great having you as always. Let's start off with a view on the index. We're consolidating, we're seeing great earnings, we're also watching out for the Fed. So what's your take? A minor pause, or you think it's time to book some profits?
See, it's generally advisable to book some profit, but the reason being is if you look at these stocks are not bothering much to most of the individuals. It is the index which is giving us jitters at time. Sectoral rotation is so strong. So I think stock specific action, generally, I was always of the view, I mean, till few months back, that don't worry about the stocks, index is the best stock. But now, since last couple of months, we have changed the stance, and the stance is to be in specific sectors and stocks. So I think if you look at the across the spectrum, right from pharma, probably metals, even banking, the stock specific things are working well. So I don't think so 200, 300 points correction here and there should worry much, because this time the froth is not there, the bubble is not there, the over leverage is not there. So I think at best there would be narrow range volatility, because 20,000 was rushed. So between 19,500, 600 to 20,000 will keep on hovering. There will be intermittent volatility, but I don't think so either side would be broken easily. So I think within this range, stock specific action one should be concentrating on.
Okay, fair enough. What are you making of these fantastic earnings coming in on the financials, and what has been attractive to you post numbers so far? ICICI Bank, of course, is a big talking point, but there have been plenty of others as well.
See, I think financials have done their bit. I would be still more optimistic on certain other sectors, because I think financials have done their bit. If you look at that, is why we have seen the reaction on the numbers, post Canbank numbers, post Kotak Bank numbers. So HDFC Bank is the only one which has done, which has performed much better post result. So I think it is still, it's like buy on rumors and sell on news. So I think Bank Nifty major components have done their bit. On the contrary, I would say that SBI, Bank of Baroda, one should be little cautious at this level. I mean, cautious in the sense that one should be booking profit and sit on the sidelines and wait for some correction, because a lot has been done by these banks. Axis Bank has to come up with the numbers. So I think barring ICICI and HDFC Bank, a lot of other banks, if you see post numbers, they have shown correction, which clearly says that Bank Nifty components majorly have done their bit. So one should not wait for the numbers and get out before that and book profit. So even if it is looking good, but the discipline says one should book profit in majority of components in Bank Nifty and financials.
Okay, great. Um, Taking a look at some of those Tata Group stocks, Tata Motors, of course, at a 52-week high, record sales coming in. What's your view on Tata Motors specifically, and are you seeing the optimism across auto or on select names?
See, autos have been our favorite sector. I mean, last few weeks we have been very very insistent on Ashok Leyland, Tata Motors, and couple of more stocks. So Tata Group, yesterday nobody was talking about Tata Steel, and we gave a bull spread on Tata Steel to buy 115 call. So I'm just sharing it for record. So I think Tata Steel, Tata Motors yet to come out with the numbers. We are very positive on both the stocks. We are positive on metals also. So I think it will continue to perform. IT will be only, probably for some time a joker in the pack. But otherwise, I think most of the other Tata Group stocks, primarily led by Tata Communication, Tata Power, sorry, not Tata Power, Tata Motor and Tata Steel will continue to do well.
Okay, great. I mean, Bajaj has also performed in this quarter so far, and we've been, getting some select calls on some of those two-wheelers as well. But let's take a look at, you touched upon ITC. I just want to bring that up because post the demerger, the stock's been lagging. What's your take there, Ashu? Because it's clearly, something that was a long time coming and value unlocking to some extent. Do you think largely it was priced in?
Largely pricing. The reason being of this correction is the street did not like the partial demerger. everyone was expecting the full demerger, but the partial demerger has not been liked a lot on the street. And there will be a complex equation now emerging that it will be a partial holding, it will be through an holding company, and then you have to derive the valuation through ITC shareholders. So I think that's the only thing which has bothered the street. And also because the demerger news was, I mean, the rumor was doing the rounds and it was an overbought. So I think that is why we have seen sharp correction in ITC. At worst, it can go to 440 levels, not below that. But at 450, 460, 470, we may see a consolidation. But is it a good buy now? My answer would be no. Is it a good sell? I think it's already done, because I think it's the last 10 rupees. It can go down more. So I would say one should be, I mean, watching ITC from the sidelines. I don't think anything, because see, now upside is not there, because I think the short-term traders who were buying because of the demerger thing, they have been caught on the wrong foot, and there has been a sharp correction. And obviously, the valuation wise, 30 rupees, it has corrected from the high. But I think 440, 445 would be the worst level for this expiry. But I don't think so. We may touch it. But I think it has to be watched for some time. One should academically watch, and not that at every price one should have a trade in ITC.
Okay, fabulous. I'm just looking at Jubilant Foodworks, rampant inflation really impacting numbers this time. But let's bring up the stock, because that's still holding fort. Clearly, everyone's still, very bullish that people are still going to be going out and eating, drinking, and nothing's going to impact that. So at 477, the stock's still up 2% after a really not so exciting set of numbers.
Yes, not so exciting, and also that it has been correcting from the recent highs of the. I mean, probably this is the only one of the very few stocks which has, on the contrary, has reversed participated in this rally, which we have seen from 17,000, 18,000 to 20,000. So there are very few stocks which have not performed, and it is one of them. So I think we don't have any view on this stock. I mean, if somebody wants to be in this segment, probably I think Westlife would be a better proposition. But probably somewhere they are losing the market share, I guess, and more concern is on the valuation side. So I would say nothing wrong in the stock, but I mean, if you see a bigger story in that from these levels, I don't think so. So I think that is why there is absolutely no trade in this stock. I mean, for 10, 20 rupees here and there, one should not have a trade.
Okay, fair enough. Should we take a look at Asian Paints once? Ashu, post earnings, I mean, they always perform, and once again, this time delivering. But in terms of stock price action, lagging in trade today, down about 4%.
See, we have seen a lot of things happening with these large cap stocks.
Okay.
So I think, Aabha, what happens is at 20,000, I mean, if there will be a small hiccup, this hiccup will affect, very strongly large cap stocks, what we have seen in SRF, in Asian Paints, and few other stocks also. So what as a discipline we advise clients is that beyond a point, even if the rally looks good, even if the stocks are looking sustainable, one should get out and watch. I mean, it is not that every time you have to remain invested in a stock. You may not have either side a call, but discipline says that the stock has run up. We have made money. You come out of it, and beyond a point, you cannot control that stock, and that is the reason. Then otherwise, you get jittery of these kind of fall. But I think closer to 3,200 levels, probably Asian Paint could be again become a good bet, because more than real estate, the discretionaries, I mean, real estate discretionaries, these building material, we are generally holding a positive view.
Okay, exciting. Um, Building materials. What about power stocks or PSUs? Look at the kind of move we've been seeing across those names lately. REC, BEML, today Adani Power, Transmission. The list is endless. You've been seeing that trend as well, Ashu.
So PSC stocks very positive, oil stocks very positive. All the laggards of the past 2 years, we have been constantly recommending to buy NTPC, to buy ONGC, to buy Indian Oil and Coal India. So all these stocks, I mean, led by NTPC, ONGC, BHAL, SAIL, we are all positive on these stocks that one should keep holding as delivery, because lower price stocks generally people tend to buy in bulk and suddenly get jittery and tend to book profit for a short term gain. But as I said, all these stocks, GAIL, SAIL, BHAL, all these rhyming stocks, and as I mentioned, ONGC, NTPC, this is the time one should keep holding for delivery and wait patiently for some time.
Okay, fair enough. So, would you say that perhaps right now there is better opportunity in the broader markets, perhaps, or in some of the other blue chips that we may see recovering ground now versus those that have been trending at those higher levels for a while? Or would you say use any dips to continue to buy the outperformers?
See, I would say that PSE stocks. These are the ones which
Okay.
I've hold. We are very positive on that. As I said, the 5 6 names I just mentioned, one should keep buying these. Even the autos, Ashok Leyland. After the
Okay.
numbers, there have been a pause, but I feel that 200 plus target is still intact. So these are the stocks which have been predominantly non-performers or underperformers of the past. Will surprise you more. So I would say to continue holding these stocks. For example, BHEL. When did you see it coming to 100 levels? When did you think that it will come to 100 levels? And at night from 85 to 90 and 90 to 95, every time it has given a five rupees move. It has given a consolidation. Look at the past chart, past pattern of these stocks. Every time this move has come, I mean, 2 steps forward and 4 steps back. Now they are 2 steps forward, pause, and then another 2 steps. This has been the phenomena. Look at same phenomena sale from 85 to 85 consolidation to 90, and from 90 it is now inching towards 95. So similarly NTPC, similarly ONGC, 160 consolidation, then 165. Now it is strongly holding 170 levels. So I would say all these stocks one should remain invested as a delivery proposition, not as a trading bet, because that is where the big money can be made.
All right, great. Ashu, such a pleasure chatting with you as always, encapsulating all the market action succinctly and some great stock ideas and strategies as well. Thanks so much for joining us.
Thank you, Aabha. Thank you so much.
That's where we leave it right now this afternoon. Consolidation zone, watching out for the Fed. That's where we're at when it comes to trade.
Ending months of speculation, the cigarette to hotels major